everyone. Hope everyone had a great day. We'll get started soon. Okay. So great evening, Complete Nation. So I want y'all to welcome y'all to Wealthy Talk Tuesday. So I'm your host, Macy Upteen, and we're going to be talking about, of course, building wealth, how to protect it, and how to just live with more purpose. So every Tuesday, we sit down with powerful entrepreneurs, strategists, and visionaries who understand that wealth isn't just about money. It's about wellness, alignment, and the mindset to sustain it all. So, if you at a place where you can grab your notepad because we're always dropping some great gems that you can definitely apply to your life and your entrepreneur journey. So, I'm going to read and talk about mindset, what it looks like to adopt a growth mindset. All right. So, first off, let's start with the definition of mindset. So, growth mindset is like having a compass that points towards progress. It's the belief that your abilities, as well as your intelligence, can be developed through learning, effort, and perseverance. Instead of seeing challenges as scary, I'm sorry, I'm letting people in, y'all. Dang, sorry. I'm just gonna start over. I didn't see these people waiting. Hi, welcome everyone. I just introduced myself, Macy Epteen. Welcome y'all to Complete Nation. Let y'all know that this is Wealth Talk Tuesdays. And this is just basically when we get together as powerful entrepreneurs, strategists, and visionaries who understand that wealth isn't just about money. It's about wellness. It's about alignment and the mindset to sustain it all. All right. I welcome everyone to get their notepads to write down any gems that they get tonight so that they can apply them to their life. Anything that they may be intrigued by, they want us to elaborate on further, either myself or the speaker come on tonight. You can, ask us at the end of the call, right? So make sure you're just taking notes and you're attentive. So I'm going to talk about adopting a growth mindset. Open up with that before we bring our speaker on, okay? So I'll start off with the definition of a growth mindset. A growth mindset is like having a compass that point towards progress. It's the belief that your abilities as well as your intelligence can be developed through learning, effort, and perseverance. Instead of seeing challenges as scary roadblocks, it's about viewing them as chances to learn and improve. So, in my own personal journey, pushing past fears wasn't just about facing them, it was about embracing the idea that I could learn and grow from the experience. So, the question is, if having a growth mindset is necessary, what is the opposite of that? And more importantly, what's the difference? And we're about to take a quick look. So, a growth mindset embraces challenges. People with a growth mindset see challenges as opportunities to learn and improve. They welcome obstacles as a natural part of the learning process. Now, on the other hand, a fixed mindset avoids challenges. People with a fixed mindset may avoid challenges to maintain the illusion of their existing abilities. So think about this. Even I know that I've had a fixed mindset at one point in my life, and I feel like we all go through that type of mindset, but we have to be willing to grow past that, right? If we really want to be the change. If not, then we just end up those people who sit back year after year, day after day, complain and make excuses of why their life is no better than it was the year before, right? Or the day before. And those are the people with the fixed mindset that they'll rather live in a delusion that there's nothing that they can do than actually live up to the challenge, right? And improve their skill set or their mindset to actually become who they say they desire to be, if that makes sense, right? So don't be one of those people, and also don't be hanging around those type of people, right? Because those are the same type of people that who will, try to downplay you and make you feel bad for wanting more and having that growth mindset. Okay, so you know that you have to, there's a big difference there, and you cannot be surrounding yourself with those type of people if you're trying to grow, right? Okay. Um, what else? Another type of growth mindset is you persist in the face of setbacks. So when faced with difficulties, people with a growth mindset don't give up easily. They understand that setbacks are temporary, right? It's just like the law, it's just the law of the world. There's good and bad, there's ups and down, right? That's why people say when the good is going, get the good while it's getting good, like while it's going. So that means, it don't mean that you're supposed to rest when it's good. No, you're supposed to get as much as you can, you know what I'm saying, while everything is good, because there's gonna come a time when things are not going to be good, and how bad your bad times are is depending on how much work you put in during the good times. Do that make sense? So things are going good and people want to rest and not put in the work when they should be capitalizing on the good days, because just like there'll be good days, there are going to be bad days. All right. So think about that. All right. When you're experiencing your highs, right? Just that's just it. You're gonna have highs and lows, but however you prepare for it depends on the severity of it, no matter what, right? So the people with fixed mindsets, they give up easily and they're faced with setbacks. When faced with setbacks, they have a fixed mindset, so they may quickly conclude that they lack the inherent ability needed, and they may give up on the task at hand, right? They just feel defeated. They're always feeling like, I just can't do it, right? Just because they don't want to rise up to the challenge at hand. So that's just my quick segment on growth mindset, whether or not, and checking ourselves and seeing, hey, lately, have we been having a growth mindset or have we been having a fixed mindset, right? Have we been rising up to the challenges that have been in our life, right, to improve our skill set so that we can really improve our life and be, the desired success that we say we want to be. Um, Now we're about to get into some great tips on how to buy a home as an entrepreneur. I have the Miss Tina Lindsay on the line. She's a realtor. She is has over what I believe like 20 years of tax strategy and tax planning experience. She is also a family office and software owner as well. So she's just an all around phenomenal woman. Great personal and professional development coach. So if you can come on the line, she's going to share, I believe, at minimum 5 tips that you can use on how you can make sure that you get qualified and can buy a house as an entrepreneur. Can I put some fire in the chat? Y'all excited? I'm excited.
Good evening. Good evening.
Woo!
Can you hear me?
Yes, we can hear you. Go right ahead.
All right. Good evening, everyone. As Macy stated, my name is Tina Lindsay, and I have been in the tax industry for over 20 years. I have been in the real estate industry for over 6 years, and I am a software owner, year one. I am a co-owner alongside my son, Mark Rutledge. Um, and I also have a travel agency as well. So I stay very, very busy. I hope you all can hear me. I am also pleased to introduce my broker, who I invited on the line as well. Her name is Van Carter, and she is the owner of Carter Dean Realty. She is one of the um, Black-owned female brokers in this region. So I am glad to have her online with me as well tonight. So as we speak about buying a home, entrepreneur edition tonight. So if we're going to kind of tag team this, so if she feels like I have missed out on something or wants to go into a little bit more detail, and if you guys have questions, she's also here with me as well. Okay. So just to begin, being an entrepreneur can present very unique challenges when applying for a mortgage because most lenders prefer salaried income, right? They like to see predictable income. They want to see that every week or every other week you have a certain amount of money going into your account and it's easy to track. So I'm here today just to give you a few tips or nuggets that will help you kind of navigate the process of purchasing home by obtaining a mortgage, right, as a business owner or an entrepreneur. So first and foremost, I would tell you to just make sure your business is registered with your state's Department of Corporations, okay? And you have obtained an EIN number with the IRS. So most lenders, when they go in and you're self-employed, they will go to your Department of Corporation site just to make sure that you're active, that you are continuously every year you're renewing the business and the business is in good standings. So that's the main and most important aspect of being an entrepreneur and trying to purchase a home. That's key. That your business is registered, that you have a legitimate business, whether it's an LLC, an S Corp, a C Corp, a partnership, what have you. Okay. Secondly, you need to have a business bank account. Open a business bank account. Make sure you are not commingling funds by keeping your personal and your business finances separate. This provides a clean paper trail that lenders require so that they can accurately assess your income and know what they are dealing with, right? So what I mean by commingling is you're not using your business account to fund your personal lifestyle and vice versa. And you go to a store and you're buying supplies for your business, but you're using your personal debit card. It's hard to track your expenses that way, right? So at the end of the day, when you're filing your tax returns, and we'll get into that, and you're trying to write off expenses and you're having to go through 3 and 4 bank statements, 2 or 3 credit cards, trying to gather your receipts, it just makes it more difficult. So make sure you have a business bank account and you are not commingling your funds, but document everything. You have to be very meticulous about documentation because your income might be less consistent than someone who's getting a W-2, what we call a salaried employee, right? So documentation is vital. Keep detailed records of your personal income, your business expenses, and keep all of your financial statements. Because when you go and when you start applying and going through trying to get pre-approved for a mortgage and go through that underwriting process, you're going to need several years of tax returns, both personal and business, right? Most companies require 2 years. There are some that want to see 3. So we're going to have to make sure we have those tax returns along with the P&L statement, or what we call a profit and loss statement, that's accompanied by a balance sheet. That proves financial stability when you're going through the underwriting or the pre-approval process. Okay. Your credit score matters. Build an excellent credit score. A high credit score is very valuable during this process because it lets the lenders know of your reliability, and it also can secure a lower interest rate for you. So the higher your credit score, the lower your interest rate can be, which means what? Your mortgage is going to be lower, right? So if your credit is not that well, you can still qualify. People can qualify for a mortgage with a 580 credit score. However, their interest rate is going to be a lot more than that of somebody with a 780 or a 740 credit score, meaning that it really makes a difference with your monthly mortgage. So work on your credit. Now, remember I stated earlier that you're going to need several years of tax returns. I said 2 years, sometimes maybe 3 years, because your tax returns, again, play a vital role in being approved for a mortgage. I know most of us, like myself, like to write off or deduct as much as we possibly can because we don't want that large tax bill, right? We don't want to have to pay Uncle Sam, give him all of our money. We don't want to do that. But while this is legally sound for tax purposes, those deductions actually reduce your qualifying income that lenders use to approve your loan. So, as people say, you don't want to look paper poor, meaning that if they were to look at your tax returns, okay, you made $300,000 for the year, but you wrote off 270,000. So you only earned 30,000 for a year. You can't afford this home. You know you can afford it, but because we didn't want to give Uncle Sam our money, now we look like we cannot afford our home, right? So it's very, very important that when we are filing our business tax returns, that we are very careful. And I like to ask my clients when they come in, are you looking to buy a home within the next 2 or 3 years? Before I start anything with their tax returns, especially if they're business owners, I'm going to ask that question. What's your goal? Because this tax return is going to be imperative. It's going to be vital when it comes to you. If you're looking to be a homeowner within the next 2 or 3 years, we need to make sure this paper looks correct, that you look like you can afford a home. Does that make sense? Now, over expensing yourself and write-offs, it your debt to income ratio, it plays a big part. So again, when we're looking at writing off things, we have to be very careful, like meals and entertainment and different type of expenses, personal expenses and everything, because when they go to calculate your debt to income, or what you call a DTI, your ratio, mortgage underwriters will look at your net income after all of your deductions, not your gross income. So the key to qualifying for a mortgage is to have documented stable income. So the more you write off, the less income you have to prove your ability to repay the loan. Okay. Now, you can't, IRS even talks about your write-offs. They have to be, to a certain level. You don't want them to be overly aggressive. Now, there are some, and we can get into that later or at another time, about certain deductions that are frowned upon versus those that are okay, that underwriters actually prefer because they can add that income back into your add those write-offs back into your income, such as depreciation, right, and mileage. Those are just two of the deductions that I know off top of my head, that can be added back into your income. So they would rather see that than you saying, hey, I've spent $20,000 in meals, or I was traveling doing this and doing that. So we just have to be very mindful of our debt to income ratio. Now, as an entrepreneur, down payment. So if we have a significant down payment, that can offset the risk that lenders associate with self-employed borrowers. So if you can put down 20% or more, that can help you avoid certain things like PMIs or private mortgage insurance. So if you can put that down, you don't have to pay that PMI, which saves you money monthly, which also lowers your mortgage. So those are just some of the things that also can help you, your down payment. Find the right mortgage program. There are different mortgage programs out there. I would tell the entrepreneurs, look for mortgage options that are more flexible for you. When I say you, I'm talking about entrepreneurs, you're self-employed, right? Some loan programs, such as bank statement loans, which allows lenders to qualify you based on your business bank deposits rather than relying solely on your tax return. Now, this can be a great option if if you decided, oh, you know what? I see this house, I want to buy a house now. But you know, the last 2 years, you've written off so much that you look paper poor and you may not be able to qualify for a mortgage. But you have large deposits going into your account and you have the money sitting in your account. So they will look at your bank statements to qualify you. Then you don't have to show or have all of that money to pay or go back and amend your tax return and have to owe thousands and thousands of dollars in order to qualify. Okay, so bank statement loans are very popular. Especially for business owners who have been writing off a lot of deductions. That's the way to go. Now, there are some pros and cons to it, but what I will touch base a little bit is just to tell you how it works. Because again, this may be an option for someone that's on this line tonight. So your income, for one, you need consistent bank deposits. So your income is verified through your bank deposits. Typically, it's averaged over 12 to 24 months, so it's 1 to 2 years. So it needs to be, those deposits need to be consistent. Irregular or personal deposits may not count toward your qualifying income. So you need to make sure. Now, you can either use your personal or business bank statements, either or. Business statements often only count around 50 to 70% of deposits due to the expenses. So if they see that, they're going to only just give you a certain percentage because as a business owner, you know that you have expenses. No one can operate a business and not have any expenses. But if you use a personal statement, they can count 100% of that income if it can be tied to your business, right? So again, most lenders are going to require 1 to 2 years of consecutive bank statements. Missing monthly deposits or statements or unexplained deposits may delay or it can disqualify your approval. So you have to be very, very careful when you decide which bank statement you're going to use. Now, when you're doing the bank statement down purchase, expect to make anywhere between 10 to 20% down payment, depending on your credit score, your reserves, and property type. The more you put down, the better your rate and loan terms are. Most lenders do require a minimum score of 620. A higher score does help offset the risk and can secure a lower interest rate. Okay. We talked about DTI before. So even though income is calculated differently, your debt to income ratio still matters with the bank statement loan. Keeping your debts low improves your approval odds. Now, this is one of the cons to it because it's not a traditional loan, okay? So because these loans are considered non-traditional, they usually come with a higher interest rate and closing costs compared to lenders for the most favorable terms. So you will have a higher interest rate. However, just to get your foot in the door, to get through closing and everything, you know, it may make $300 a month difference on your mortgage. But guess what you can do? After a year, you can go back and try to refi, right? To get it lower. So that gives you an opportunity to work on some other things, right? It may even give you an opportunity to say, you know what, let me start doing my taxes on a quarterly or paying in some quarterly taxes to offset my tax liability. That way I can show more income on the next year. Then I can go back in and try to get this refi at a lower interest rate. So you do have options. You have options there with that. Now, even without the tax returns, you still expect to provide proof of business ownership, complete bank statements, valid ID and insurance, and possibly a P&L statement prepared by your accountant. So they will still be asking for documents that they would even with a traditional loan. Because again, because it's non-traditional, they're going to make sure the I's are dotted, T's are crossed before they give you this money. Okay. So again, I don't know if my broker, again, Van is on the line. I don't know if there's anything she wants to add to the bank statement loans or if she has anything that she would like to say before we close out.
Well, Tina, I think you have done a wonderful job going over all this information tonight. So thank you so much. I just want to add a little bit of information for you guys going back to where Tina was talking about the documentation and that being very important. So these types of loans, of course, when it comes to the bank statement loans, they can be very tricky and challenging sometimes. And sometimes mortgage companies do kind of frown on them in the very beginning because they can be and are a little complex when it comes to just going through those bank statements because they're using your bank statements, of course, to solely qualify you for the most part. So, guys, documentation is going to be key when it comes to this. Those situations where sometimes we have a business and we may be like, oh, I'm a small business, or I'm somebody that's a freelance worker, I'm just an independent contractor. I prefer to do my own taxes. I prefer to kind of do things myself. Guys, don't do that. Hire a professional. Get a tax preparer, hire a professional, hire a CPA if you can, spare the money to do so because it's going to be very important when it comes to keeping track of all of this information and record keeping when it comes to your books. So these bank statements, they're going to be scrutinizing every single deposit that goes into your bank account. So if you're getting deposits from somewhere, you got to make sure that it is documented income, that there is a paper trail as to where that source of income is coming from. So if you're saying, okay, I'm a nail technician, or I do hair, or I'm a tax preparer, or whatever it is that you're doing as your business, or a freelance worker, or even if you're driving Uber, of course, because you're a 1099, individual. That stuff has to be documented. There has to be a paper trail leading back to where that money came from. Banks now, of course, legally, they have an ethical obligation now to make sure that there's no money laundering involved as to where funds are coming from. So it is very important that you guys make sure you're documenting, you're keeping up with your 1099s. If you receive pay stub statement, sometimes if you're working for a company and you're receiving a 1099, sometimes you're getting stubs as well. Any documentation that you have to be able to keep up with record keeping, that's going to be very crucial and very key to these things. The other thing I wanted to point out for our business owners is just making sure that when it comes to your taxes, filing your taxes properly, filing your taxes on time. And if you owe, of course, then set up a payment plan, of course. Set up a payment plan. Don't just go, of course, just knowingly knowing that, okay, I owe IRS and then I'll get around to paying them when I can, when I whatever. Because trust me, when you go and apply for this type of loan, they are going to check that. They are going to be checking to make sure that, do you owe IRS? Is that debt cleared? And if not, have you set up a payment plan? And they're going to want to see proof of that as well. The other thing is to, of course, just kind of look into the fact that banks are now looking at if you've got any type of business loans out there that are government loans. Like, let's just say if during COVID, I know they did a lot of business loans, SBA loans, and things like that, government loans that were given for our entrepreneurs and business owners. Those things are being tracked and looked at as well when it comes to the mortgage process. So if you've got a loan debt that's out there for, such as a business loan, then take care of that debt as well, because it's going to come up. You're most likely going to be declined for a mortgage if there is a default balance that's out there. So try to get ahead of the game, that if you are, not keeping up with any type of business debts that you have out there, then you want to make sure that you get that rectified before you apply for a actual bank statement mortgage, because they're going to look at all of those things. So that's all I had to add. Thank you, guys.
Thank you, Van, so much. I appreciate it. She is the best broker. I love her. She's just full of knowledge and she's such a teacher. She has so much patience and everything with her group. So I definitely appreciate you for jumping on tonight. Also, when you mentioned 1099s, that brought up something as well. Because a lot of people say that they're self-employed when they are contractor employees, right? And they receive a 1099. So if you work as a 1099 employee or a contracted employee, which is considered self-employment, you don't lenders don't necessarily have to see that you have set up an account or registered with the state, with the Department of Corporations, or obtain an EIN number, because at that point you're working up under your name and your social security number, right? However, even if you're a contracted employee, I would tell you to go ahead and open up that business, right? Open up a legit business. It's only $138 a year. The EIN number is absolutely free. So you once a year before May 1st, you would just go in and renew your business. That way it does legitimize your business, but it's not required if you, let's just say you you're saying that you own a cleaning business, right? But you haven't set anything up. So you're going and you're working at different banks and you're cleaning different banks. And those banks are actually giving you a 1099, or they may be giving you a W-2, depend on if they gave you that option or not. Most of the time it's a 1099, right? So if they're giving you a 1099 under your name and your social security number, they can use that 1099 to track your income at the end of the underwriters or the lender when they're going out to try to get you pre-qual for this mortgage. So I just wanted to throw that out there because sometimes people confuse the two and they really don't know, but knowledge is power. If you receive a 1099 and you say, hey, I have a cleaning business, I'm just operating under my name, but you're receiving a 1099 from a company, you're considered a contracted employee. You don't necessarily have to register. Okay, I just wanted to add that as well.
Wow, y'all. I absolutely love this. And this is exactly what Wealth Talk Tuesday is all about, y'all. Giving you the blueprint and a belief system to level up not just your income, but your mindset and everything. Listen, do y'all have any questions for Van? Any questions for Miss Tina Lindsay? Y'all can put them on, you can put it in the chat, or you can come off of mute and ask your questions. Any questions? Any questions on Facebook? Anyone in the process of buying a home or looking forward to buying a home next year? Is there anyone preparing? Has anyone purchased a home as an entrepreneur? I know I have, and I've went both routes. The bank loan route, with a bank statement route, and the traditional route with W-2 income. So, and I've just purchased just cash, but um, everything they were saying was factual. Even added some tips and things that I didn't even know. So I really love this. I really thank y'all for y'all time. I'm gonna ask y'all a couple questions before y'all go, okay? I want to know, what does wealth and wellness feel like to you? And not just financially, but like in your spirit, health, and your peace. What does wealth and wellness feel like to you? Tina or Van, either one of y'all can answer.
Okay. Well, wealth and wellness, I think they could go hand in hand, because you have to be spiritually sound, spiritually grounded. I think you have to stay humbled, um, because God says too much, to whom much is given, much is required, right? So we have to be able to manage what he has given us, right? And it's not always about money, but your health. You need to be able to take care of your body, as well as manage your bank account. So I believe the two, they actually go hand in hand because, again, to whom much is given, much is required.
Wow, thank you for your wisdom. Man, you got any comment on that one? Or you passing?
Now, I just want to add, I agree with Tina. And for me, it's more of so of mentality, right? Mindset when it comes to those two words. Because oftentimes, of course, when people don't have the right mindset and their mentality isn't where it needs to be, they can't they can't combine the two together, right? The wellness and the wealth together. So and I think that comes into play with the lack of knowledge when it comes to what does it take to obtain wealth? What does it take, of course, to incorporate wealth with wellness? Um, and it is to me also on a spiritual level. So and it's all about the mentality when it comes to those two words as well.
I love this. I love this. Thank you for that wisdom. Okay, and the last question is this. I want y'all to describe your purpose in just 3 words. Who's going first?
Let's see, 3 words. I've got two, but let's see, three.
Okay, we'll
Um,
take two.
mine, I would say, let's see. I'm going to say driven housing hero. That's my 3 words. That's my purpose. My purpose is to educate my people on what wealth looks like, generational wealth looks like through real estate. My purpose is to create every single year more and more homeowners, to get individuals and families to home ownership as much as possible. I know, of course, a lot of people we all have to start out somewhere, and renting, of course, is the start. And that's my passion too in property management with getting people housed, but also, it doesn't stop there. We have to get to that point of home ownership. So those are my 3 words, like, when it comes to just being that housing hero that's going to come through and educate my people on what housing looks like on the scale of home ownership. what does that look like as far as generational wealth to have a piece of property and land to pass down to your children? What does it look like to be able to scale in real estate and obtain properties and have rental income coming in to be able to retire and have that as a lifelong dream, right? And to be able to pass that wealth down from generation to generation, to, of course, your bloodline. Because we know one thing about real estate, like, it's always going to hold value. It can continuously be passed down and it's always going to make money. So that's my goal.
I love that. Well, you're living it. And it's just
I am
okay.
still thinking, I too believe educator is one.
Yeah.
I do believe that knowledge is power. And if I can speak into someone um, and help them become a better version of themselves, I'm here for it. I would say stewardship, because I know God has called me to this. So I have to be a good steward, right, over what He has given me. Um, and legacy. I want to build this
Amen.
legacy is for my family.
Ooh, I
It's
love
for my children, right? I'm not just doing this for me, and I'm here to help the next person come along. We all can eat, right? There's enough money out
it.
there for each and every one of us. So if I can educate the next person and help them build where I am today and where they see that they don't think they could be, I am living proof, right? That God is able. Because I was a teenage mother. So statistically, I should not be where I am today, but God, right? And I believe that's because of the anointing that is on my life, right? So educating, stewardship, and building a legacy to leave behind for my children and my children's children.
Amen.
In my soul. Child. Listen, that was very, very powerful, y'all. And I do thank y'all for sharing y'all wisdom and y'all journeys with us. Again, I'm gonna say before we end, do y'all have any questions, any comments on Zoom or in Facebook? I know that we seen y'all got Facebook lit up. I know we seen we had some home buyers in Facebook. So maybe you want to come on next week and share your journey with everybody because I know you're an entrepreneur as well. Manisha, and you do credit, so that'll be great. So listen, if y'all are in Complete Nation, if y'all have a specialty, another niche, another industry that you have expertise in and you want to come on and share, every Tuesday we're going to be doing Wealth Talk. Every Tuesday I'm inviting other powerful, inspirational entrepreneurs that are actually out here being a real person with real results and helping somebody else, paying it forward, right? Welcome them into this platform so that we can just shine our lights together and cover more darkness, right? So if y'all don't have anything to say, we're gonna thank y'all for joining us tonight. Thank y'all so much. Thank you, Miss Tina. Thank you, Van. This is our first time meeting. It was a great virtual meetup. I love this. I hope this won't be our last time talking, especially on Wealth Talk Tuesdays. Y'all make sure y'all register for next Tuesday. My commitment to y'all is that I'm gonna show up no matter what. No matter if I'm just getting off a plane or got to go to a plane, no matter what, I'm going to show up and make sure I stay committed to you all because this is part of my commitment to my success. If y'all do not know, we are dedicated to helping 90 people become millionaires in the first 90 days of this year. We have been blessed to help over 16 become millionaires in the first 90 days, and we definitely hope that these people requalify and that we also have people just like you join us as a 90-day millionaire. So if you are interested, I'm going to invite you to our tax training this Saturday, free of charge, okay? If you or somebody want to join in, learn how to open up a tax office, learn the tax implications of your financial decisions, right? Learn how to build a profitable business, right? By also building a team and just learning so much personal and professional development and being tagged into so many resources in proximity to so many other high net worth individuals, right? You're just gonna be energized, you're just gonna be motivated, you're just gonna be challenged, you're just gonna be held accountable, right, to be the best version of yourself, all right? So if you're one of those number ones out there, knowing that you're the number one in your family, knowing that everybody's depending on you, and knowing that you need to be around a community of people who can recharge you daily, that can pour back into you to make sure that you stay who you need to be as the Superman or Superwoman in your community or in your family. We invite you to Complete Nation. All you have to do is text us at 832-900-4992. Text us at 832-900-4992. You'll have direct access to leaders in the company like myself, Miss Tina Lindsay. We have Mark Rutledge on the phone. We have $5 million earner Jennifer Harris on the phone. We have Joel Prophet on the phone. We have so many amazing, successful leaders, right? Not only professionally, but personally as well, right? That's ready to serve you and just be with you on your journey of success. All right. So Complete Nation, welcome you again. 832-900-4992. Text us your name. Talk to us just like you'll talk to anybody else. We talk back. One of us is going to talk directly to you. So you won't be talking to yourself. All right. Again, 832-900-4992. And I will see y'all next Tuesday. Thank y'all. Be blessed.